Good morning, everyone. How are we doing? How's everybody doing? Ian, how are you? Hey, Badir, how are you doing? Hey, Moran, how are you? Alrighty. Well, hey, what's going on? Hey, Ian, Dave, James. Okay. Let's open up the trading account. Let's see what's shaking. Marcus, how are you doing? Alrighty. Let's go take a look and see what we're dealing with. Let me start with the daily candle wax here. Yeah, I'm expecting lower actually. I'm very short biased for size traders. I'm looking for 66.21 to the downside, um, and see if that, because that level has been very reactive in older contracts. So I want to see how reactive that level is in the new contract. We have, gosh, from September of last year till now, trapped longs, swing longs, investment longs, whatever longs you want to call them. They are trapped, and they are trapped over 67.50. We are under that 200 for all you moving average junkies. We are underneath the 200. So remember how we said old traders, you could tell traders who grew up in the 80s because they'll say, "Oh, under that moving average there'll be sell programs." And there were, right? So people will start selling and trimming their, it's all about risk management, you know. So they'll start trimming positions and maybe start adding at 67.48. I mean 64.87, sorry. Let's see what happens. But what do we do in the meantime, right? So say you're not trading a $2 million account and you're not swing short. Well, if you are swing short, that is your pinata low right there. So let's go over those and mark that because that's 66.34 area. You notice it hit here and it hit here. Now this is the new contract and it's back adjusted, volume based rollover. So, and it's the continuous contract. So, but it works. That's the reason I use it because I've been doing this now since 2012 and I've found that that is the best thing to do for rollover. So, we should mark that level, right? Let's go mark that level just in case we break it. 34 quarter, 34 half, 34 and change. We want to make sure that if that level gets broken, what is going to happen down there? Now, I'm not Marvin the mind reader, so I have no clue what's going to happen until we get down there. Yesterday, I said look out for that low here, the green candle. Here, let me show you. I said look out for that low, and we got there pretty much to the tick, stopped, and we're We're holding on by our fingernails here at 66.61. Hello, Juan. How you doing? Right. So at 61, we're just kind of hanging out. Let's see what happens. Yesterday was Fed Day. Today, I'm sure we have. Do we have some kind of news today? What do we have for news? 8:30 in the morning, we have jobless claims. Okay. Nothing for tomorrow, so we're going to coast into the weekend. So let's see if we break lower. You know, there are things to note. I want you to, we have a, this is the first time in a while that we've had a gap down that has not filled. The last time, we had that gap down, it took 1, 2, 3. It took 4 trading sessions to fill it. Usually when we have a gap down, we fill it that day or the next day. This is the first time, so that, you guys, trading is about change, okay? And I know it's early in the morning and everyone's kind of still half asleep, but this coffee's really good, right? The Titanic was afloat, right? I do believe the last time we had that happen was when King Kamea, he forced off, he pushed all those people off Polly Lookout. I think that was the last time this happened. Little old Hawaiian reference for you there. Oh, yeah, throwing rocks at each other. So we have, you know, we have 3 Hawaiians in the room now, which is great. And 2 of you guys are from like Hawaii Kai, so that's pretty interesting. Um, Looking at this, there's change. So when the markets change, we have to be aware of that. Now, what does that mean for us as day traders? Well, it means the look below and fail is not going to be a give me trade, right? It means the look below and fail is going to take some work because supply is above us. So when supply is above us, that means we have resistance. When we have resistance, it means, oh, there's sellers. When there's sellers, it means that look below and fail trade, we got to get in and out quickly, right? Hey, Charles, how are you? Long time. No, it's a real gap down, trade maker. We're we're not even looking at the March contract. Right? We've been off the March contract. So if you look at this, right? I'm just going to make it simple for you because there's supply here, my friend. Oh, okay. So there is supply here. There is a gap. Right? So this is new contract, new contract, new contract, and we have a gap. Make sense? It is a real gap. If you went and smelled it, it would have body odor. It is in fact real. Right? It's real. So, and that is important because we have change. So you have to manage your expectations a little differently. Let's go take a look and see what I mean by that. Here we've got to look below and fail. So if you are a regular look below and fail trader, and we're in an uptrend, right? Meaning if you have inventory below us and we're in an uptrend, when it breaks, you can take that look below and fail and it'll really rotate back up to the top. Here, do you notice that we have sellers? So the look below and fail, say if we went long at 63, yeah, we might have to get out at 66, and we might not even get to 66 because there are so many trapped longs above us, and they're all kind of itching to get out. So we want to start working on our short game a little bit now that we have inventory above us, right? So we want to start if you've only been doing the look below and fail, hopefully you took my advice and you did it 500 and 1,000 times and you built up knowledge of where the sellers come in. Now, when the sellers come in, that's our cue for short selling. Okay? So, for example, let's go take a look. See how we did the look below and fail here? But we hit sellers here at 65. So, what we're going to need to do is we're going to have to now we'll look for a look above and fail of 62 and see if the market accepts under 62. Let's see. There we go. So if we're taking shorts and you're shorting, say you're shorting 60, I'm going to put an offer at 60 and 3/4 and one at 61. And I'm going to put my stop at 62 and 1/4. And I'll let that breathe a little bit. And if, I might be early here, right? So I'm calling out my trades as I take them, and I'm stopped out at 62 and 1/4, right? Annoying, but that's okay. It tells me that there is a bid there, right? So if there is a bid there and it's choppy, I might not want to trade this, right? So I took a short, right? I took a short. I told you where I was taking the short, and I got stopped out. Okay? Okay? Now you realize, Ian, why there's selling pressure, right? So I was a little early. So if you took it again and you're shorting on the look above and fail of 62, you're short there. Your stop is above 62, and that old overnight low from earlier in the session is at 56. Okay? So you're waiting for the market to come down, and you put some bids in here at 58, 59. Say you're short 61 against 62, 62/4. Put some bids down there. Does everybody understand what I'm talking about? Now, if it starts chopping around, leave it alone and let the large traders work that out. I think we discussed this yesterday. You understand what I'm saying? Guys in the room? Okay, folks, I'm going to ask for a favor from the people in the room. Okay? Folks in the room, I'm going to ask you for a favor for the next couple of sessions. All right? I'm getting a lot of hecklers in YouTube. So I'm thinking of shutting down the comment section in YouTube. But I need you guys to participate, otherwise it's me just talking to myself. So I do the YouTubes to try and bring people in the room. Lately we've had a couple of dipshits who keep coming into the YouTube and trying to screw things up. So I kind of need you guys to participate a little bit more. Because usually when I'm talking, it's just like frickin' crickets. So if you can, try and ask some questions. I know it's early in the morning, and I know you guys are half asleep. Yeah, it brings interesting questions, trade maker, but it also brings idiots because it's like working the front door of a nightclub, right? So I'm trying to balance this between marketing and also because what happens is these guys get into the room, they get into the YouTube, and then they cause, you know, they cause me to get off my sort of my flow, right? So I need you guys to participate, okay? Yeah, because you know the internet is one of those things everybody can say because they don't get punched in the face, right? In real life, they would get punched in the face. Yeah, I'm trying to figure out the blocking thing. But so in the meantime, when I ask questions or when I talk to you guys, try and respond. Right. That's all I'm asking for. So that's what we'll do from now on. Because I don't want to like just do. Otherwise, I'll just do recorded sessions and put them out if people don't ask questions. Right now, I know people need to ask questions because I know you guys are struggling. Right. So see what I'm talking about? So here we have that look below and fail again, but you have to go and mark the sellers, right? You have to go and mark where the sellers are, and that way you have tactical information, right, of where you're going to get out of your trade. How is inventory correcting? Well, Redcom, what we're doing is we're selling off, right? Hey, Patty, how you doing? So what's going on is we have inventory above us, and that inventory now, not everybody sells at the same time. That's what you have to remember, right? So not everybody sells at the same time. So as the market goes sideways, people will get in, some people will get out. But there is more selling pressure than when you have a market that's doing this. Let me show you, right? When you have a market that is in an uptrend like this, there's nobody here to sell into it. You see? But now we're in a downtrend. You've got all of these people who are selling into it, right? So that that we have to manage that because when we are taking the general trades that we take, like these look below and fails, we are going to have selling pressure come in. So what that means is it's the same, you know, what that means is for us, we are not going to get as many big opportunities unless there's a big short cover that comes in. So what I'm trying to say is manage your expectations, right? And when you manage your expectations, right? Do I tend to trade the both the look below and fail and the look above and fail? Here's what happens, Sticky Bandit. Because this market has been making all-time highs for months and months and years, you kind of get used to going long. And you're shorting because you're not shorting nearly as much as you do in a normal market. So what I'm trying to say is we need to start working on our shorting skills, right? Identifying where there's a seller. So say if you see, oh my God, there's a seller at 66, let's sell 65 quick, put a stop at 66, go put some bids in at 63 and 62 and see if we can shave a couple of points. So what I'm trying to say is because the market has been in an uptrend for months, well, for years, now we're in a situation where, remember last spring when Mr. Trump had his little hissy fit and he had his Terminator 2 Judgment Day thing? Well, it's the same thing that's happening, right? We had inventory that was long, not quite as long as here. And then you had that big flush down and back up. So now I would say we are in this stage. See right here? That and that are quite similar. See, this and this are similar. This and this are similar. That's why I'm so short biased, because I'm seeing this pattern repeat itself again. You mean every day? I'm sorry, Charles. I was talking a lot, so I might have. You mean every day for what? Could you expand a bit on the question? The fit? So if you are taking the look below and fail, it's better to wait for an extreme, right? So you want to take the look below and fail. If you're expecting a larger value trade, like a larger trade, you're looking for this because it's at the best discount level. Here, you're not getting the same push back up. Does that make sense? It's like when you pull a rubber band back, the snapback is more from the very edge, right? So just things, this is basically tactical awareness, situational awareness. And what we're trying to do is we're trying to educate you guys so you understand that the markets are going through a period of change. That's why a lot of traders are like, they're profitable, and then all of a sudden the markets change because the business changes, and everyone is completely not ready for it, doesn't know how to read it. They keep trading the same way, and then they get frustrated. You see? Well, spam, the order flow changes, so the look below and fail will change. The characteristics of the trade will change. So what I'm trying to do is I'm trying to teach you about, see how if you were looking for the look below and fail here, you got maybe 3-4 points out of it, and now it's back under 62. So there's more selling pressure in the market. When there's more selling pressure in the market, the trade is harder. Hope that helps. It's just learning how to adapt to when business changes. So that short I took here and got stopped out on, that's the trade I was hoping for. I was just a little early. So had I not been talking and asking you guys to participate, I would have been more on the ball and tried to probably hit that because I saw that there's a seller at 62, right? And that's another thing that I want to talk about a little bit. If you are trading this market, it's a little harder to trade. You guys notice that this market's been harder to trade, right? You notice that this market's a little harder to trade. You want to be more dialed in. That means don't be on your phone, don't be daydreaming. If you are going to trade, why is it harder to trade? It's because the business is changing, spam. You understand that it's a business, right, brother? And business changes? Okay. So the business is undergoing a change. So learning to adapt to that change as a trader is one of the most difficult things because 99% of traders don't even understand why it's changing or how, or they don't even know it's changing. They just know that what they're doing doesn't work. So when the markets get like this, you don't want to trade distracted. You don't want to just try things. You want to be really, really dialed in. So have a checklist. Ask yourself, am I really, really paying attention? Have I been watching? Have I identified where the sellers are? Have I identified the cost basis? Do I really know what I'm doing? Have I taken some test trades to see whether or not what I'm thinking is actually working? And when you do make some money, don't do this, oh, if you have an edge, push it. If you're not a consistently profitable trader, when you make a little bit of money, stop trading for a little bit, journal your trades, look at what you did wrong, take a little bit of a break. Okay? Nobody builds short positions, sticky bandit, except prop traders, right? The market is built to go higher, right? People build long positions. Like, think about it. Does Walmart build a short position of televisions? No, they go and buy televisions at wholesale and they sell them at retail, right? That's the business model. Don't forget, guys, that's why they call it futures market, stock market. Remember the little word market, right? Remember this is a market. So it's a market, and this market is something that you really, really look at that short covering that came in. Let's see where they sell into it. Wow, look at that. That's just a couple of big orders that came in off that 58 right when we got down and took out that overnight low, came back up. The trade was look below and fail of the overnight low. So, sorry guys, I've been like flapping my gums this morning and I haven't been calling out the greatest trades, and I apologize for that. But you could see we went right up to 67 and the sellers stepped in, right? I know. That's what I'm talking about being dialed in. If you're not dialed in, it's a lot more difficult to trade this market. What's the business reason why single prints get a reaction? If there's single prints to the upside, there will be bids at the bottom of them. If there's single prints to the downside, there will be offers. So the business reason are orders, right? So when you move up and you create single prints, you have, say you have a position here and then you have single prints and another position here. When you come back down here, the people who are short will put in buy orders. Okay? Does that make sense? Looking for 62 on the downside if you're short the 65s. Right? So that's all it is. And that's why we need to know where the shorts are trapped because that's where support is. So support is created by shorts who are trapped. Why? Because to close a short trade, you need to put a buy order in. So once again, you marked where the sellers were going to be. Had you gotten, if you were really quick and say you did buy 58.60, right? You know that there's going to be sellers up here near 66. So you want to sell because now it's coming right back in. That was just one group of short covering orders. And what must you think when a market sells off and then starts to move back up? What is the first thing that you're thinking? Where are they going to sell into it? And if you've marked where they're going to sell into it, you actually have a tactical advantage over everyone else. And that's why I was beaking off about being dialed in, because you have to be more dialed in this market. Otherwise, moves happen quickly, you miss them, right? And if you chase, if you chase that long and you got in here, well, then you're getting stopped out really quick. It's a real pain in the ass, right? So you're going to have to be faster. You're going to have to be sharper. You're going to have to concentrate more. You're going to have to do more homework. I would recommend rewinding charts and watching the charts. I would recommend a lot more homework than you guys are used to doing if you want to be profitable, right? It's going to take a lot more work this spring. So March, April, May, into June, these next couple of months are not going to be easy to trade. So you're going to have to work harder. That's all there is to it. Now let's see if that overnight low, which just snaked in close to the previous day low. Yeah, more homework, Moran. When markets get more difficult to trade, yeah, you know why, VS? Because you thought they would sell into it at 6666, but they sold into it at 6667 because they saw some sucker who was willing to pay 4 ticks higher. So you got to fill them and then sell it back down. What's going on, Moran? It's like now you're a California teenager. Now you're going to start going, whatever. Yeah, you're going to have to be more dialed in. Nice work, Dano. Nice work. Let's see. We have a poor low at the overnight low. So there's a little bit of buying competition down here. You have a poor low right at yesterday's low. So let's see if what the next order of business is. You can see 61 and a quarter. They sell into it right there. The next seller will be up here at 64.65. Whew. Now VS, if they see buyers at 61, they'll raise the offer to 62, 63. See? Ah, couldn't get up to 62. Not just yet. Let's see. Nope. Seller's still there. Oh, there's 62. There's 62. And then they sell it back down. That's the same thing that happened at 66, 67. It's the same phenomenon, right? You see those suckers, you raise price, you fill them. Once you fill their orders, you sell it back down because you ran out of suckers. If they keep coming, you keep raising price. There. There you go. There's 63, 64, and back down. So if you're going long here, right, I would put my stop probably at 61, and I might be too early if I was going long here. Generally, I'm too early. If 62 holds, you can stay long. If it doesn't, scratch the trade because it's really choppy. And you know there's sellers at 64. So say you bought 63. Put a sell order at 64 and a quarter, 64 and a half, 65, 66. Because remember, there's going to be sellers when you get up here again. Right? Inventory is above us. Inventory above us means supply is above us. When supply is above us, that means that is resistance. Resistance is created by trapped longs. Support is created by trapped shorts. That's just how markets work. They've worked like that all the time. The trapped longs are the first to sell. The trapped shorts are the first to buy. Why is that? There's a business reason for that. Because they are closing out positions. Be quick to take profits. Yes, definitely VS Squad. What's my ideal setup, Aaron, is to look below and fail. Why? Because the market's built to go long. Let me tell you why that's my ideal setup. Okay, I'm going to take you back in time. Okay, if you don't mind. In the old days, say you were trading a stock and you noticed it started to sell off. Okay, say the stock was trading at $7. All of a sudden it broke 7, went down to 650, down to 6. And when it broke 6 and it went to maybe 575, in the old days before algorithms, you'd see what's called a block trade. So the stock would go from $7 down to maybe $5.75. Okay? And at 575, you'd see a million shares go across at, say, 580, 590. And everyone would scream block, and they'd run in to buy because they know that the sell order is done. And you'd buy the stock, probably at 6, flip it out at 650, 675. Do you understand? Now you have algorithms and electronic trading that cut up that sell order so you don't see the block. but you see when the sell orders are completed because the market goes underneath a level and comes back up. That tells you that the sell orders are completed. So if you're looking at 58, you go long over 58, you put your stop underneath it, and you sell into the next level. Does that make sense? That is the look below and fail. It is the ideal setup. It's the oldest trade in the world. Why? Because when the sell orders are done, price goes back up, right? Failure to go, you can call it whatever you want. You can call it look below and fail, failure to go lower, Rumpelstiltskin, catcher's mitt, whatever you want to call it. It's based on the business of the sell orders being complete. And the market, you have to remember, the market is created to distribute inventory. Otherwise, why are people there? People are here to sell crap. That's why they call it a market. The more crap you can sell at the highest price, you win. And then you try and buy it back real cheap and do it all over again. That's why it's called a market. Yeah, and you can't spoof filled orders, right? These are transactions that you're seeing on the chart. Now, if we get above, excuse me, if we clear 66, 67, we're looking for where those sellers are at 68 3/4. Here we go. And if we clear that at 70, and your target destination, if you are still long, is VWAP, I'd be selling at 70, 71 if you are long. So this look below and fail here worked a lot better than the other ones because we finally cleaned out the sellers. That's what this back and forth action does. It cleans out the sellers. Yeah, we still have sellers at 67, 68. Cool. Oh yeah, sure, gold. I gotta, let's see. Jeez. 46, that 46.32 area. How do you know which to take? Well, you take 1,000 of them, Aaron, and you learn how to differentiate between one and another. Now, this is a process where you will get stopped out, right? But, I mean, you can see that the look below and fail trade, it works on everything. Here's a look below and fail using a 4-hour chart. So when it looked below and failed 46.30, you're buying here, you put your stop here, and you're selling into that strength. But you've got to practice it. It's not random at all. The only thing that's random in markets, Aaron, is you. There's a business that's going on, right? There's a business that's taking place. It's not random at all. Cisco, yeah, I'd be looking for 46. I'd look for a look below and fail of 4,600 on gold. Now, I don't trade it, so I don't know what the order flow is like, right? So the look below and fail, let me spell it out for you guys, right? Because if you think it's random, then you don't understand the business. Okay? So there's a couple of different look below and fails here. Okay? You've got these ones here. You've got this one here. You've got this one here. And you've got this one here. So you have 2 or 3 different trades. But the order flow is different. No. The timing's not random. Do you understand the concept? Okay, how do I spell this out? Okay? The market goes under this level. So what you do, if you see the candles being choppy, and this is what I'm telling you guys, Aaron, you should come into the room and I'll teach you how to do this. How about this? Let me make you a deal. We got 3 days for free in the room. Okay? You come into the room today, right? And I will do a session on the look below and fail later on today for free. Right? If you really want to learn how to do this, come into our room and I'll teach you. Right? This is a YouTube session and I'm trying to get people interested in the room. Right? It's a business, right? We don't charge a lot. So what you do is you buy, you put your stop under the level, and then you put your sell orders out. Now, I've taught thousands of traders how to do this, and hundreds of people in my mentoring class. And we have people making money, so I know it works. I also know it works because I've been trading for 34 years, and I've traded billions of dollars in order flow. So you're going to have to practice it. Does that make sense, Aaron? You still there? You don't know what order flow comes in because you have no experience with it. There's two Aarons. Two Aarons don't make a right. Okay. Alrighty. There you go, Cisco. You have to get all King Kamehameha on these guys, right? I don't have so many levels, little Echo. Right? You don't know what you're talking about. You're taking you're taking a trade at an extreme and you're not even listening to what I'm saying. See, this is the thing about these YouTube comments, right? I'm trying to help you guys come and learn, right? Take your little ego and put it in a box for a little bit and try and learn. If you know what cost basis is, you're going to be going long at the bottom of a cost basis because it's an edge. It's not random and there's not levels all over the place. This is the cost basis, right? I even color coded this shit for you guys, right? Right? This is color coded. This is the cost basis, right? This is the cost basis. This is the discount zone. This is the profit zone, right? So if you guys would actually listen and pay attention, you might learn something. Sorry. I'm sorry. It's been a long week. I've had a lot of hecklers on YouTube. I think it's a full moon, right? Because it brings out all the snapper heads, right? You know, and if you just pay attention, right? I've got 400 videos on YouTube. I've detailed how the trade works, the business reason for the trade. You guys don't even pay attention to that, right? It's the triple witching. It could be Sticky Bandit, right? Try and shut your mouth and open your ears. You might actually learn something, right? It's okay, right? I'm becoming old now, so I don't put up with a lot of bullshit anymore, right? You're going to have to practice this trade and you're actually going to have to listen. When a market goes underneath a cost basis and comes back up, that's where the trade is taken. The trade is based on the fact that the sellers don't have to sell under 62. It's not at all random. I'm not telling you to buy this area here. I'm telling you to wait for an edge. It's going back and forth here. So if I'm waiting for a larger trade, I'll be waiting for this. Because this is where you get the best discount. Now do you understand that they're not levels on a notepad like a notebook? There's a business reason, right? You guys have no clue that it's even a business, so how do you even know about the business reason? That's what I'm trying to teach you. Okay? It's okay. Business is not for everyone. That's why 99% of people fail. Number one is because they don't listen, they don't pay attention, and they don't use their simple, God given common sense. And they know nothing about business. That's why you guys don't make any money doing this. And that's what I'm trying to the best of my patience and ability to help you guys learn how to make some money. Right? So if you just listen, you might learn. You don't have to. You can keep blowing accounts and losing money and having your hair fall out. Today in the room, for the larger traders, I am doing a size trading class at 11 o'clock. We will be talking about putting positions together, trading size, holding trades longer. We will also be talking about trading around positions. So you can be short in one account and then trade back and forth in another while you wait for your short to work out. I have an example of that from yesterday, right? You can't do it at the same brokerage firm unless you have a prime brokerage account. They won't allow you to do that. They'll nail you for wash trading. Okay? But yeah, that's 11 o'clock a.m. this morning. Cool. Crypto, I don't trade crypto. I buy crypto and I hold on to it when it hits certain levels. I don't trade it because it's not something I've learned how to trade. But you can use the look below and fail on every single market that exists. Cool, Charles. Good stuff. It's okay, Dave. You can always learn for later, right? All right, folks. I am going to sign off for now. I got a bunch of calls to do, so have a great morning. Take it easy. Stay out of trouble. If you want to learn how to do this, don't let the cheap price fool you. We know what we're doing. Thanks, everyone. Have a wonderful day. Stay out of trouble out there, and we'll see you at 9 o'clock. Bye.